All right, welcome to the online edition of CMIS424. This is a makeup session for missing class last night from our little dusting of snow that we had. I don't apologize for canceling class because I feel like it was the right thing to do. I know a lot of you have a commute to campus and it just didn't feel safe, and especially in a format where we can catch up this way is fine. The only downside to canceling our face-to-face time is I had to cancel the Protivity demo. So remember, Protivity is the IT audit arm of Robert Half, which is a huge accounting services firm. And I was really looking forward to them coming in. Lindsay Gleason had come up with a great presentation for you guys. And there's an outside chance that maybe for our last class session in December, so not the exam next week, but the next session, she might be able to come back for that, but I'm not sure if we can fit it in or not. But I'll let you know as that develops. Fortunately, we don't have a ton of stuff to cover. I was going to, after Lindsay's presentation, I was going to lecture for less than an hour, so I can cover that even faster in a video version. So the last chapter that we're going to cover together is chapter 12 on fraud. And so my approach is I'm going to teach you how to commit fraud. That's the best way to learn how to audit for fraud, is to learn what fraud is and how to do it, and then how to audit for it. So some fun stuff for us to talk about. So let's get started. So I do need you to finish reading chapter 12 before the exam, and homework 7 is due this Friday. I think I pushed it out because of my boo-boo not posting all the documents that you needed. And I will probably post a study guide for you guys, but I'll simply say this. At this point in the semester, the training wheels have to come off. And you guys should really be creating your own study guides, not relying on somebody else to do that for you. Especially in my other classes, I feel like just handing out a study guide is like pushing you around in a wheelchair, and I'm ready for you to walk on your own 2 feet now. So if you have a study guide that you want me to look at, I'll be happy to give you feedback, and I'll probably cave and post something, but do the work, create your own study guide. So let's get started with chapter 12. Here we go, the learning objectives. I will just touch on business ethics. There's a lot more around the ethical implications of auditing that I do want you to focus on in the chapter. But the definitions of what fraud is what I'm going to focus on in this lecture. Why people commit fraud. I mean, it should be for obvious reasons, but we need to talk about those reasons. Anti-fraud techniques, how you can even use ACL. And then I do want to introduce you to one more piece of privacy legislation, and that's CCPA. We'll talk about that at the tail end. The California Consumer Privacy Protection Act that was passed last year and goes into effect in 2020. And so because it's California, and because, as I've said in class, that's the benchmark for other states in terms of the most stringent privacy laws, I do want to give you a little familiarity with what CCPA is all about. So here we go. It obviously goes without saying that ethics is a huge deal for the IT audit profession. And if everybody behaved ethically, we probably wouldn't need IT auditors. But we live in the real world, and so we have to trust but verify, to use that old phrase. So there are a number of ethical issues that are kind of typical ones. I'll just point out that number one with the bullet is always going to be privacy, and that's going to be our biggest problem for the next 10, 20 or more years, is enabling people to control ownership over their personal information. Number 2, computer security. Number 3, ownership of property. Do look at some of the examples in the book about why these are ethical concerns. Equity and access is kind of a soapbox for me, because this gets into digital divide issues around everybody doesn't have equitable access to broadband internet. So if you live out in the country, you know this to be true. If you live in an underdeveloped country, this is the case. Or simply if you're in another country away from an urban area, you're not going to have the same access to the internet, which becomes more of a social justice issue, if anything else. Environmental issues, so sustainability is another category of ethical concerns. Artificial intelligence, this is an intriguing one. When do we want computers making decisions for us, particularly when it comes to things like healthcare? Certainly big data can help solve a lot of problems, but it also creates other problems, other ethical problems. So double check the text on that one. And then finally, unemployment displacement. So if IT is all about automation, I mean, that's what we do professionally in IT, is we automate things. But that necessarily means people are going to lose jobs, which is an ethical concern. I don't know if anybody in your family has lost a job due to automation, but it can be a painful experience, and it's something we need to be sensitive to. And then finally, the misuse of computers, certainly one of the areas we've talked about for auditing. When you join a company, you're going to sign the company's code of conduct or their acceptable use policy for the right and wrong ways to use computers in the workplace. Some of them are obvious, like don't surf porn at work. Some of them are less obvious. So do check out the chapter on those issues. Just to drive the issue home, what's the number one ethical issue that we have to deal with? Privacy, privacy, privacy. So to that end, let's go ahead and talk about the California Consumer Privacy Act right now. There is a YouTube video I want to show you, so I'm going to see if I can show this within this same window. Hang on. Okay, let's try this. So this is comparing the new California legislation with GDPR, which we've already talked about. Yep. Okay, seriously, I can do this. Here we go.
Similar to the GDPR, California passed the California Consumer Privacy Act of 2018 last week. Join us for this GDPR Minute as we discuss the key differences between the two initiatives. Last week, the state of California unanimously passed AB 375, which is officially known as the California Consumer Privacy Act of 2018, and the legislation will take effect on January 1st, 2020. This bill, which initially started back in February of 2017, is very similar to the familiar European Union's GDPR. Much of the same data classification, business logic, and tracking of consent and preferences developed to comply with the GDPR should carry over to this new California law. Today, I'm going to talk about some of the key differences between the two regulations. The first key difference is that California Consumer Privacy Act will allow businesses to offer their users certain financial benefits in exchange for users' consent to collection and processing their personal information. Additionally, the Act prohibits businesses from discriminating against those who haven't given their consent. The second difference is, in Europe, consumers must opt in by affirmatively giving consent. Under the CCPA, consumers don't need to opt in unless the individual is under the age of 16, but they can't opt out of the sale of their personal information to third parties. And finally, and most importantly, the CCPA provides a limited private right of action for data breaches with statutory damages up to $750 per consumer per incident, or actual damages, whichever is greater. While the California Consumer Privacy Act shadows the GDPR in many regards, there are significant differences between them, most importantly in regards of financial incentive to share personal data. And keep in mind, with the AB 375 not going into effect until the beginning of 2020, many expect that both consumer advocates and business community will lobby further to amend these and other parts of the law. Thanks for joining us today. We'd love to hear from you and be a part of this conversation, so please chime in the comment section below and let us hear your thoughts around this new initiative.
Okay, let's pause there. So what's important there is I can see people very soon doing CCPA audits, just the same way we do HIPAA audits today, or GDPR data audit. So CCPA, or whatever state's equivalent is going to be, is kind of the next big thing that's coming up for privacy. And this takes effect January 2020. So before you know it, it's going to be here before you know it. The big difference between GDPR and CCPA, in Europe, it's still opt-in. This is a cultural thing between Europeans and Americans. In the USA, we're all about opting out because we still protect the rights of corporations over consumers. That's not an opinion. It's just the way things are here. So in Europe, it's opt-in, but here it's still opt-out. So it's not quite as strong a privacy legislation. The financial penalties aren't as egregious as with GDPR, which remembers up to 4% of your annual revenue. For this, $750 per consumer per incident. So if you've got 100,000 consumers in your database, that's going to get pricey in a hurry. So CCPA is no joke. So just something I want to make sure is on your radar just as you move forward into your career. Okay, the other connection I can make between CCPA and course content is this. The same way we've had to do SOX audits for years now, ever since Enron in 2001 and 2002 for SOX, and we're still dealing with SOX. We'll be dealing with CCPA for a long time. Now, the obvious difference is CCPA is state level law, whereas SOX is federal level, and also there are jail time penalties for violating SOX or finding fraudulent financial statements or misstatements. I have not seen any jail time associated with CCPA yet, but we'll see. So SOX is our primary mechanism around auditing for fraud. It's just one aspect of doing a fraud audit, but it's a big part. So let's get into the meat of what fraud is technically. So when I'm talking about fraud, I'm talking about white-collar crime. A fraudulent act has to meet 5 conditions, and yes, these are test-worthy questions right here. You're making a false representation, which means it's not the truth, which means it's a lie. 2, of a material fact. So material meaning relevant, and there's an impact to business. Relevant, and there's an impact to business for a material fact. So if you're lying about something that has nothing to do with business, then that's not fraud. That's just being a jerk. And 3, that there's an intent to deceive. Like you know it's the wrong thing to say or wrong thing to report, and you report it anyway. And then 4th, justifiable reliance is kind of a legal term, but it just means that you're entirely reliant on me to disclose that information. You have no other way of getting that information besides my disclosure. And then 5, there has to be some kind of resulting injury or loss. So if we don't have any one of those 5, we don't have fraud in a technical sense. We might have an unethical situation with any of the other, if you have 4 or 3 out of those 5, but all 5 are necessary for fraud. Two examples of fraud are employee fraud and management fraud, and we'll talk about which one of these is worse. Well, we obviously want to have controls in place to keep employee fraud to a minimum. Part of this could be theft, stealing stuff, and we're not talking about stealing pencils from the supply closet. This is selling an asset, stealing an asset, and then selling it and keeping it a secret. That's what employee fraud is all about. This could be individual assets or a whole room full of assets. And this little meme here, employee fraud, where there's a bill, there's a way, is kind of dramatic foreshadowing of a video I'm going to show you on how to commit fraud. But by far the more important area of fraud that we need to watch out for as auditors is management fraud. And the reasons for this are dollar values are doubled. I mean, not just doubled, but we're talking about a grotesque amount of money that managers are typically responsible for. So the risk is a lot higher, the business impact is a lot higher with management fraud than with employee fraud. So in terms of where we're going to spend our auditing dollars, we should probably focus more on management fraud than individual employee fraud, just for practical reasons. Part of the problem is management might be the ones in charge of the controls or who are looking at the reports of the outcome of compliance with controls, in which case it's just easy for them to either ignore the report or bypass the control entirely. Now, why in the world would anybody ever commit fraud? If we know it's wrong ethically and legally, but ethically to commit fraud, you shouldn't do it because it's illegal. You should do it because you should avoid it because it's unethical. Anyway, what for money is one answer, but there's a classic theory called the fraud triangle to help explain when, where, why people in an organization can commit fraud, from employees to managers. It includes both situations. So the first one is situational pressure. One example would be you've got a relative in the hospital and you need money to save their life. It's kind of a moral dilemma that you might be in, but still doesn't justify stealing from the company. But people would understand that situational pressure. Why do students cheat at the end of a semester? Well, because there's situational pressure to perform. You're worried about your grades, and you're worried about, trying to tell mom and dad that you failed a class or didn't perform well in class. There's situational pressure. There's on-the-job pressure. There's family pressure. And these are very human things. They have nothing to do with technology, right? The second factor is just the opportunity or access, or both, to commit fraud. If somebody leaves the car running with the keys in it and they walk away for an hour, not that they're asking for it, but you would certainly understand that there is an increased opportunity. If somebody leaves a big stack of cash lying on their desk, the opportunity for fraud is a lot greater than if somebody has to go to a lot of trouble to commit the fraud. And then the third area is really interesting. This has to do with rationalization, that most people know what's right and what's wrong, but we have an amazing capacity to rationalize to ourselves, to justify our own misbehavior. If you've ever cheated on a boyfriend or girlfriend, you know what I'm talking about. You're able to rationalize, well, this is why I did it, and the heart wants what the heart wants, even though you know you did something wrong. What's interesting is I've read some studies that talk about people that have advanced degrees. So, for example, PhDs, people that are more educated, are much more clever at rationalizing their behavior than people with less education. So, yeah, the point is almost the smarter, I don't want to say the smarter you are, but the more educated you are, the easier it is to rationalize your behavior. So keep this in mind when we look at just the statistics for who commits fraud, and you'll see that the typical age range is not young people, but people, well, here in the range of, between the ages of 51, 55, average loss is 600,000 compared to, somebody straight out of college that doesn't know how to commit fraud for more than 25K, amateur. And then based on educational level, somebody with a high school degree versus college versus postgraduate, and you'll see that the most likely perpetrator of fraud is me. a older white male with a PhD, with an advanced degree, with lots of experience. Yes, I am the person you need to be watching out for. In fact, what's today? Tuesday. Tomorrow I'll be 52, so I'm right there in the prime spot of fraud perpetrators. So that's who you need to be watching out for. And you can kind of tell this if you go back and look at the Enron photos. Old white guys. That's who you need to watch out for. I'm being a little sarcastic, but not really. So to wrap up this idea of who's going to commit fraud, just having access to assets, and keep in mind the asset might be money, the asset might be information, right? If we're trying to protect our information assets. And the best way to try to prevent fraud is with the principle of segregation of duties, which we talked about way back in the first week, maybe week 2, but I think it was the first week of this class with the COSO framework that focuses on segregation of duties as a principle that auditors look for. So enough talk. Let's dig into the details and see how is it we can commit fraud if we so choose. I've got a couple of examples to show you. Notice that there's actually a magazine called Fraud Magazine that you could subscribe to if you want to get more ideas of how to commit fraud. The information is out there. So let me cue this up. All right, here we go. How to commit fraud.
CBiz presents One to Grow On, quick strategies for your business.
Hello, my name is Lance Randall. I'm a director in the Anti-Fraud Services practice. Welcome to CBiz. Today I'd like to talk about some of the common fraud schemes we're encountering in our practice as a way of raising awareness for our clients, contacts, and other friends. I do a fair amount of public speaking and anti-fraud training, and one of the things I always talk about is what is the easiest way for an employee to steal from his or her employer. And I'm not talking about back-to-school shopping in the supply closet or adding a few extra miles to an expense report. While technically that is fraud and is very aggravating, those typically aren't bet the company and not even bet the career types of schemes. No, when I'm talking about stealing from an employer, I'm talking about stealing enough money to make it truly meaningful to the employee or truly disastrous for the employer. So what's the easiest way to steal that kind of money? Simple. Have the company write you a check. Now it sounds like a bad joke, but unfortunately the joke is all too often on our clients. Of course, the companies don't know they're writing a check to the premature retirement fund of a trusted employee. That's where the fraud comes in. Typically, a fraudster is able to forge approval signatures or convince a coworker that the payment's for a legitimate business purpose. Often, they'll set up a shell company, get the company on the approved vendor list, and then use that company invoice for obscure items or abstract consulting services. Sometimes, the entire invoice amount isn't even fraudulent. One example is an employee that owned industrial space, then rented that space back to his employer for the legitimate business use. Nothing necessarily fraudulent about that, as long as the rent being charged by the employee/landlord is at fair market value, a detail that can be overlooked by an employee bent on fraud. So if the easiest way to steal money from a company is to have the company write you a check, what's the best way to combat this type of fraud? Well, organizations need to do a better job of understanding who they're writing their checks to. It sounds like a simple concept, but again, too often overlooked. In the industry, we refer to these as vendor validation procedures, and they can take many forms. But with the prevalence of information available on the internet, a lot can be done in a short period of time. Of course, I don't believe everything I read on the internet. But if I can't quickly determine that a company exists, I take that as a bad sign. The best protection is simply check for the basics. Does the company have a working website, a working phone number, a street address? Is the street address in a residential neighborhood? Does the street address happen to be an address of an employee? Is the company registered with the Secretary of State? Is the registered owner actually another employee? Of course, these aren't the end-all be-all of anti-fraud procedures. But by taking these minimal steps, organizations can do a better job of understanding who they're writing their checks to and combat this common fraud scheme. The second scheme I'd like to talk about is...
Yeah, let's not reveal too much information too quickly. I don't want to scare you. I will point out that this idea of getting an institution to write a check to a fraudulent vendor is something that happened at SIUE in the past year, where there was a good outcome, the problem was fixed, and the criminals were tracked down, and we got our money back. But our accounting department was fooled into sending money to a fake vendor. So this is very real stuff we're talking about, even though I'm kind of flippant about showing you videos on how, just have a company write you a check. There are lots of ways to do this. Also, this example focuses on theft of money, but I also want you to think of theft of information as a relevant category. All right, then. This is kind of fun. So let's do one more. So again, procurement fraud is a very common area to look at. Let me show you an example here. Okay, here we go with procurement fraud.
Procurement fraud, there's a variety of fraud schemes that can occur in the procurement of goods or services. Anything from bid rigging to kickbacks, price fixing, product substitution, where you procure goods and services and are provided with either inferior quality or short shipments. There are conflicts of interest that occur within the procurement process where an individual can contract with a family member or a friend or with a company that doesn't exist. Many times we have what we would call a phantom vendor scheme in the procurement fraud area where someone would procure goods or services from a company that doesn't exist, that was in fact created by the employee, where they are processing cash disbursements to these companies for a product that has never been sold. The number of employees that are procuring goods and services for companies has changed dramatically. The nature of procurement fraud in today's business environment, everyone is potentially a perpetrator of a fraud scheme occurring under the procurement process. Most associate with bribery and corruption or kickback schemes as off-book, and so they are much more difficult to investigate. The reason being is that any type of cash that is kicked back to an employee or paid to a vendor in the form of a bribe or a customer is generally made in cash or checks, and it's off the books and records of the company. So much more difficult to trace. But when we look at those types of frauds, they are unique in the sense that they generally do impact the books and records at some point by means of inferior quality product, short shipments, paying of exorbitant rates for services or materials that you're buying. So what we try to look at is the relationship. We try to look and determine if the same vendor is being used repeatedly. Are we competitively bidding this project? Who's opening the bids? Are they being reviewed both subjectively and objectively? When we look at the procurement process, there is a number of subjective processes that are included in procuring goods and services. So objectively, a company can have a policy in place whereby anything over a certain threshold, say $20,000, is required to be competitively bid. The subjective part of that is when the bids are received. Who's reviewing the bids? Are there rebids? Are there change orders in the projects once these projects are underway? Fraud examiners provide valuable resources to any company that is looking to implement policies and procedures around the procurement of goods and services. And I say that because generally we've been exposed to a variety of fraud schemes that, we bring up a lot of inherent knowledge around internal controls that should be implemented and or designed to reduce the risk. So some of the things that we often suggest are, number one, to have a policy. Employees need to be made aware that a policy exists, and they need to be able to establish expectations and guidelines. Otherwise, sometimes they'll go off to their own devices and make their own decisions when it comes to procuring goods and services. Secondly, when it comes to educating employees, we need to educate them about how the procurement process should be followed. So the reason why I say that is because when I look at my own company, as big as we are, you might think that we have established policies and procedures that are consistently applied across the entire globe. And while that is true in certain locations, we do have some isolated locations that have smaller business structures, and they may in fact have less segregation of duties, less internal controls, which thereby increases the risk for fraud. I mentioned segregation of duties. That's critical. The same person that is paying for the services cannot be the same person that is procuring the services, reviewing the bids, and making the selection on which vendor to use. And these sound like very basic controls, but I think many people would be surprised at the number of large companies that don't even have these basic controls in place. In a procurement fraud, if you have a corruption scheme or a bribery scheme or even a kickback scheme, you have collusion between two or more parties, there's no interest in either of those parties coming forward. So you've got to be able to have strong interviewing skills to get people to tell you things that they otherwise don't want you to know about. I think good data analytics. A lot of procurement frauds are uncovered analyzing data. When we look at our disbursements, when we look at accounts payable, being able to determine which companies are paid perhaps the same invoices paid on multiple occasions. Perhaps we have round dollar amounts being paid to a specific vendor, which could be indicative of splitting invoices to avoid delegation of authority limits. The ability to analyze the increase in vendor spend over a short period of time. One red flag that's inherent with certain types of phantom vendor schemes is that a vendor might start off small, a vendor who doesn't exist, and after the person becomes comfortable committing the fraud, over time they'll begin to increase the amounts of the invoices. They'll begin to increase the frequency in which the invoices are submitted. Being able to analyze that data to detect those red flags is very, very helpful. So interviewing skills, analytical skills, both very critical to the fraud examiner when it comes to procurement fraud.
Brought to you by Fraud Magazine. All right, so a number of things came up in that. Notice that he's a certified fraud examiner, and we talked about this in the first week of the semester, and I originally presented it as an advanced, kind of later in life career path for auditing, and then had a wonderful conversation with Jonathan's mother, who informed me that no, if you have 2 sections of accounting and a college degree, you're ready to be a certified fraud examiner, or at least a fraud examiner, and then sit for the certification exam later. But this is the kind of stuff that you'd be looking for. Kickbacks, conflicts of interest, phantom vendors, bribery, corruption, price fixing. I've seen this in the workplace. This is not academic or rare even. So even in our IT department at Lowe's, in the department right down the hall from mine, there's a woman who was responsible for providing for outsourced IT services. I don't want to get too specific, but she put a contract out for bid, selected a vendor, and unbeknownst to everybody initially, she was getting a lot of gifts from the vendor, concert tickets, cookware, trips, and then towards the end it just got worse. And so she was supposed to put it out for bid every 2 years. She didn't. She just kept the same vendor, and eventually she just started getting money from that vendor to keep the contract in place and not put it out for bid. This was uncovered by an auditor, and she was immediately and summarily fired from her position with no benefits whatsoever. It was a huge scandal. Everybody was shocked that this could even happen, but this is why having a policy to put things out for a competitive bid and then auditing that process is so important. So all the steps he talked about in terms of having a policy and educating your employees on the policy, and then having internal controls to make sure that the policy is followed. And then anytime you have controls, you can audit those controls on a periodic basis. And I like what he says about the skills that you need for IT audit. Notice he did not say technology. He did say analytics. So data analytics, some of that is some statistical and quantitative skills. I think business intelligence skills, data analytics skills are going to be huge for the IT audit career going forward. And then, of course, interpersonal and interviewing skills. So back to the same refrain of you have to be good with people to be a good auditor. You can't just be standing there with a clipboard trying to prove that somebody did something wrong. You have to be more subtle than that. And with that, we're ready to start wrapping this up. So one final point about auditing for fraud. It helps to use specialized software. This is not the kind of thing you're going to catch just by eyeballing it. So back to the chapter on CAT tools, computer-assisted audit tools and techniques. ACL being the dominant one that's used by auditors is great for rooting out payments to fictitious vendors, is just an example. So auditors using CAT tools is the appropriate response for trying to root out fraudulent activity within the organization. So that's Chapter 12 in a very small nutshell. There's more information. I do expect you to read through Chapter 12 because it's all good content. I just can't cover it all, and I'm not going to spoon feed you either because you can read, because you be college students. And I'm punching out because I'm looking out at the snow out my window. Just, the Midwest. Anyway, that has nothing to do with anything. As you're getting ready for the exam next week, review your notes. Don't just review the slides. Review your notes. Make sure you took notes on any videos that were shown in class. And get a study buddy. That's the best thing you can do to prepare. The worst way to prepare for one of my exams is by yourself. If you haven't learned that by now, oh my God. And then, of course, the last piece of advice is don't change your answers, okay? Just trust yourself. You know this material. It's common sense stuff. I'm not trying to trick you on the exam. You'll be fine. Just put in a couple hours of good study time with a group of people from class, and you'll be ready. And in the meantime, if you have any questions or concerns, please reach out to me. Call me, email me, text me, come by my office. I'm here to help you. And I'll see you soon. Thanks. Bye.